Hi, and welcome back to Hedge Fund Manager. I'm Karl-Mikael seeding. Let's now move over to the technical analysis of Atlas Copco, the deep dive of today. I've included here a chart since October 2023 of Atlas Copco, their B shares. Actually, you can buy either one of them, but the B shares are typically the correct one to go for in Sweden, except when it comes to the banks, then it's usually the A shares. So we see the candle chart for Atlas Copco for 1.5 years and their 200-day moving average, as well as a typical Bollinger Band area around the share price. And a few things to notice here is that as with many other stocks, Atlas Copco doesn't quite respect the 200-day moving average line. So for example, here in the fall of 2023, they moved just slightly below, so kind of a fake break to the downside, which they instantly, in just a couple of days, recaptured, and from there was no looking back. They established a really strong trend, actually moving far away from the 200-day moving average. Some technical indicators around here would actually have screamed that they are too far away from the 200-day moving average. There are indicators for that as well that would measure the distance in terms of standard deviations from the 200-day moving average rather than from its own average over the last few days. So the Bollinger Band shows the standard deviation around the recent average for the company, and we could expand that to use the 200-day moving average rather than this very short-term 20-day average for establishing these standard deviation bands, and then in that case we would definitely have seen Atlas Copco being at a rare point of very close to the upper limit of the Bollinger Band. Maybe we could just quickly go there. So this is Atlas Copco's technical chart in investing. Let's click on candles and then add the Bollinger Band. Bollinger Bands, change that to 200 length and see what we'll get, and then just scroll backwards in time. Let's hope it doesn't crash in any way. And now we have about the same view as before, and as you can see here, right around here, which was my guess, using the 200-day moving average as the basis for the Bollinger Band, you would have been right at the top here, very far from the 200-day moving average, which is often an indicator of the share price being too stretched. However, it's not as reliable as one might think, because sometimes you can see here how it moves just close to it. It's kind of follows, it tracks very closely the upper band for half a year, and what's actually happening is that volatility is increasing and thus expanding the 2 standard deviation band for the Bollinger indicator, which means that it can keep going up even though it's already pretty far, even though it's already 2 standard deviations away from the 200-day moving average. So again, it's a pretty unreliable indicator, and you can't even say that once you move down from a Bollinger ceiling, that is a good indication of selling, even though here it worked. and worked really well, because if you sold here somewhere and just kept holding it, kept holding your short position, you would have done really well. Then I'm just again emphasizing that these technical indicators, they are slight indicators, slight add-ons for your timing and complements to your actual fundamental analysis. Anyway, we are now below the 200-day moving average. One thing to note here as well is that we actually moved below back here in August 2024. And had we sold and kept our sold position or not entered into the stock again, that would have been good in a mid to long term. As you can see here, we are still quite a bit below that original break below. However, a lot of times you can see Atlas Copco fighting with the 200-day moving average here, going up and above and below several times. Sometimes it looks like it's honoring the 200-day line by not really being able to go above, and then suddenly it does fight with the line for a while, and then it wasn't until here that we actually got a fundamental reason with the tariffs war and the rest of the market going down, that Atlas Copco eventually gave up. So where are we now? Well, we are definitely below the 200-day average, and that would be quite the headwind. It's a negative signal for the stock. On the other hand, we are also, it seems, clawing back some territory here, probably trying all the way up to the 200-day. So in the very short term, this is probably actually a tailwind, something positive for the share price. But once we get close to the 200-day, that might actually be the place to sell, or at least to hold for a while and just see what happens. Will it actually be able to break up above, or will it this time honor the line and the negative trend? And I am a bit skeptical towards the economy and to valuations, and I'm kind of foreseeing, looking at the technicals for the market and the economy, a few years of negativity, perhaps lower valuations, lower growth rates. It all depends, of course, on what the central banks and the politicians are doing. But for now, I would say that in broad terms and looking out a couple of years, we are facing headwinds for stocks, not least cyclical stocks, industrials like Atlas Copco, and also for the overall market. So let's also take a quick look at the market's technical formation. So this is the relevant market for Atlas Copco, the OMXS30. So these are the 30 biggest stocks in Sweden. You could use Dow Jones or S&P 500 because they tend to move very similarly to OMX, and they have done so for 100 years. But anyway, this is more relevant for Atlas Copco. And as you can tell, since Atlas Copco is such a large part of OMX, the OMX S30 technical chart is pretty similar to Atlas Copco's. The market, as you can tell, it also doesn't honor the 200-day that well, and it has a pretty similar appearance with a breakdown and then going back up and trying to recapture the 200-day. It's very close, but we still don't know if this is the failing point where it will resume the negative trend, or if it will actually find some reason to move above and then re-establish a positive trend. I would, however, conclude that this is a negative technical formation for the overall market, and I would be pretty cautious here to initiate any long positions in industrial companies or in the general market. So this is actually a worse time than average to buy stocks and to buy Atlas Copco. So we'll see what the fundamentals have in store for us, but for now this looks like it's a bit negative.